Hello, welcome to Make Boss Capital channel. My name is Michael Chu. I have Sunil in the background. This is for the market recap for week ending November 15, 2024. So this week, we kind of talked about it last week, like the market was really strong. But this week we gave back, and you can see right here on Nasdaq. So last week we were up pretty nicely, make a new high. But this week we gave back quite a bit. Not the full amount, but still looks pretty bad right now. Let's go to Nasdaq on the daily chart. So we started out the week like kind of slow and was holding really tight. Looks really good. But then Thursday we get the Fed Powell comments that maybe we don't have to cut this interest rates that fast. And then all of a sudden the CME futures for Fed rate cut in goes down to like 60% next month, next time. And so market react negatively to it, and then Friday it actually even gapped down, and you can see here below the 10-day, and then the 21-day is the pink line, and it also closed below it. So it was pretty bad day in general, like the last 2 days. Volume you can see is quite high, so that's also not a good sign. If we go to 5 minute bar, you can see there was like pretty much a whole day of down day. There was really not much bounce. Like even at the end of the day, it was really mediocre bounce. So it's possible we can get a gap down on Monday, and just to test everyone's patience here, as it could possibly go down to the 50-day moving average. Which is still a far away, but you never know. Right? This is the red line. And if it does go down that far, I'm sure that will be a lot of panic selling here. And if it does go down there, we hope to find support, somewhere this coming week, right? But again, this could be substantial losses in some cases. And we'll talk more about some of the tech stocks later, but they're definitely going through some sort of pullback and so forth. Yeah. So let's jump to S&P. Very similar chart. Again, previous week was pretty good. The good thing here is volume is a little bit lower this week, but it's still above average as you can see. And again, it give back some gains this week. Go to the daily chart. Here, it looks slightly better. It's sitting at the 21-day right there, and 50 days right here. So again, we could get another test at the 15-day as well here. I hope not, but you never know. So we're gonna watch out for that. Next, we can go to Dow Jones, and so Dow Jones I think has the best chart right now. It is at the 10-day, and 21 days right here. It could go down there. 50 days here. So it relatively is like the strongest. You can see right there on the weekly chart. You can see it make a new high this week, and it gave up not even half, I think, of last week's gains. On Russell, we have a really big week last the week on the election week, and and then this week we also give back roughly half of it. On the daily chart, it also hit the 21-day line. So this is roughly where the 2300 level is. So hopefully it will find support here. A lot of time, this is the index, but in general, stocks they tend to break out and then come back to the pivot point, which is usually the previous high. So we hope the same thing will happen here and it will start to bounce. This is the test here for anyone who bought near the top here. They're under severe stress right now. They might want to, they'll test their patience basically. If it does go down, then the 50-day line is not far away, and it could hit that and bounce from there, and that will come in below obviously the 2300 level. And again, that will shake out quite a bit of people there. So yeah, those are all possibilities. So this is equal weight S&P 500. So it is also at the 21-day. So see if we can find support at that level. Again, 50 days not far away. And then looks at equal weight Nasdaq. So this one performed quite poorly. As you can see, it's now near the red line, which is the 50-day moving average. So this one is quite a critical level here. It could definitely test this low here, 123.69. So that's not a good sign. We also have the highest volume selling on Thursday here, which is also really odd. So that could be a bad sign. If people want to get out so bad at this level here. Next, we're going to look at the 10-year yield. And the 10-year yield fell down after the election. But then this week, as you can see, it started to bounce back. And now we even hit the near the 4.5 level. I think we settled at around 4.4, yeah, 4.42 here percent. So the Fed had a meeting on Thursday, and they're saying growth pretty good, at the labor job level, and companies are growing still and all that stuff, and there's no and inflation are kind of sticking around. Sorry, let me jump to CPI here. It rose 0.2% and then 0.3% for the core. So it's just not like, it's kind of okay. It is no longer falling though. So now it's stuck at, around this level for yearly is 2.4%, and 3.3% for core CPI, and core PPI is 2.4%. So with that being said, like yeah, so the Fed said there's no need to maybe cut as much rates going forward, and that since Thursday, since those comments, market has been coming down pretty hard. Not sure if this is temporarily or not, but here's the bigger problem. The Fed face a conundrum. This is from RBC Global Insight Weekly. Um, it has cut policy rate by 75 basis points since September, only to see the longer-term Treasury yields and mortgage rates increase by the same degree, right? And this is a problem, right? You can see right here has gone up on the yellow line, 10-year Treasury yield, and the Fed funds rate has gone down. So it kind of works opposite, and this could be a problem. So you can see here recently, since the last year, every time the long-term Treasury yield goes up and the long-term mortgage rate, fixed rate also goes up, and this is creating a lot of problems probably for the home builders and so forth. So here's the home builder index, and you can see it's stabilized. It hasn't dropped much more, but it's starting to come back down slightly. But it's getting really tight, so maybe it's okay. But we see lots of volume selling here. But yeah, at least it's been more stable lately. This drop is severe right here. The US dollar here is also at pretty much near new high right here, and this is becoming a problem as well for because it just seems like this is on a very strong uptrend, and this could cause problem for exports and stuff. Um, so since the election, you can see the oil price has been going down. So definitely, that's what the Trump administration probably want, and it seems to be happening that way. Let's look at XLE for a second. Now, a lot of energy stocks starting to climb. It's fascinating, despite the oil price going up. I mean down, sorry. So this is kind of interesting. Coming back to the RBC Global Insight Weekly, cyclical stocks surge as interest rate hurt others. So on November 15, after the election, you can see the strongest group is consumer discretionary. Then comes financials. Then comes energy. And you can see the US dollar has kept going up again. This area seems to be benefiting from either the higher US dollar or as well as the interest rate yield. Utilities are also doing not bad, and real estate. So here is the consumer discretionary chart. It went up pretty strong, but then again, like most stocks, either top early this week or by Wednesday or Thursday. So now it's coming back to the green line. So it has come up really fast. Now it's pulling back a little bit. So right now we want to see support at this 10-day. It could possibly come down to the pink line 21-day before it bounce. Either one will look fine for the chart. And so yeah, so this group is worth watching because it has done really well recently. So it could continue to lead. Let's look at the financials here. So look at how tight the financials are trading this week. That's impressive. Again, they have lead since the election, and we saw the huge gap up right here, and it's been holding tight. It doesn't want to come down to the 10-day. Very impressive. The utilities, it has gone down from the high, like again, utilities, the power generation from AI demand has really, moved this index up pretty good. But recently we can see two pullback, and this one undercut the previous one. And now on Friday actually was doing pretty decent, and you can see the volume on the sell side has really come down, and it was really stable here. So it's possible we can make a move up here. I think if we cross back above the red line here, which is near the highs, recent highs, that could be a signal here to look at utility, power generation related stocks. So yeah, um, the real estate recently again also did a double bottom here. It is a little bit stable, but it's still coming down. We'll see if it can bounce back here. But yeah, not as strong for sure as utilities. So the worst index probably this week is the XBI. Again, this may have to do with like the appointment of like the health administrator for the Trump administration, and it has come down so hard. And yeah, look at this volume. So a lot of my health stocks got knocked out this week, unfortunately. So this is what's happening to this sector. If you look at the XLV, the general health sector, this one also looked very terrible. So it has really given up here. It looks like this is like in a bear market right now. I'm not sure it will end soon, but the volume has, really rise. So it could be near the end of this correction. We'll see. We have one more load here to test. If it come down that far, it's possible they could bounce there. We'll see what's gonna happen here. But yeah, I know vaccine stocks got hit hard, like Moderna, might be one of them. Yeah, a lot of stocks did really bad, but this is already on a downtrend for a while. But it got knocked even harder after the administration announcement appointment. So yeah, so this is looking really bad. Lilly, one of the top growth stock, and has probably the best obesity drug out there. It's undergoing a correction as well. You can see this is starting to look pretty ugly here. Make a new low, 747. So it did undercut that low as well. So look at all this high volume here as well. Waters also make a new low, gap down. It did close up a little bit high in the range, but overall it's a gap down, so you cannot trust that. Volume also came in high. Now it's possible it could start to bounce back here, but usually look at the short-term moving average and see what it does around those average as it bounce back. So some of the more secondary indicators are a little bit bearish. Put call volume fell to 0.59 on Monday, the lowest reading so far this year. The volatility index also fell for 6 times in the past 7 sessions. So this is like lowest since July 23. And investor intelligence sentiment report, advisor sentiment report shows bullish advisors climb to 60.3%. This indicate a complacent market for that is ready for a pullback. Thursday, we also saw a lot of government-related consultants get hit hard from appointment of the Department of Government Efficiency. Here we see Parsons, Bruce, Allen, Hamilton, Ladles, Science Applications all suffer sharp losses. So here's the IBD 50 ETF here. We break out right here after the election, but then we pull back this week, Tuesday, Wednesday, Thursday, Friday. This is quite steep as well. So we'll see if we can get a bounce here soon. The last time we got tested 50-day, so here's where the 50-day is. So that it goes down that far. Let's see what's gonna happen. Just want to talk about Chinese stocks. Look like they were bouncing back, but then again, this was a trap. And look at where it is now. It's much lower. So again, with the election result, it's probably not as China friendly going forward, and hence their stock market looks like it's starting to go down as well. On the K-Web also looks very not too good. So Bitcoin hit like I think 91 or $92,000 this week, and it jumped quite a bit over the weekend and into the beginning of the week, and then it's starting to pull back a little. It did find support on Friday. You can see it didn't hit a new low. um, and the volume starting to subside as well on the selling side. So that might be a strong indicator that it might want to go higher. And a lot of people talk about the 100K Bitcoin, so which has a high chance of hitting it now, just it's not that far away. The one stock that most IBD traders trade is MicroStrategy. You can see this chart very similar to the Bitcoin. Um, Also top on Wednesday. Again, similar chart here. Thursday, Wednesday, pullback. Friday, it found support as it didn't undercut the low. Let's look at the New York Stock Exchange advanced decline line. For breadth, we're seeing the breadth starting to fall again on the NYSE, which is related to S&P. Then we saw Nasdaq hitting a new low. This is not good. So we gotta be careful if tech stocks gonna go into more sell-off here, because really bad. So IBD does have indicate two distribution days, one on Wednesday. I believe it's on the Nasdaq. Yeah, volume surge on the Nasdaq. But it's still only one distribution day in recent weeks, so that's still good so far. And then on Friday, yesterday, we have another distribution day on S&P. So S&P is at 3 now, so that's very interesting. Anyhow, on the week we see a lot of stocks being at the beginning we saw it continue on, we see accumulation, but then as the week progressed, we see distribution coming in and starting to increase quite significantly. Um, on the industry group side, also see that increasingly as the market pull back. On the sector areas, again, we started out okay with financials, still in the green by the end of the week. This is net accumulation minus distribution based on number of stocks I follow. But pretty much every area is kind of underwhelming being distributed in general. So financial, like I said, is holding the best right now in this big sectors group. The semiconductor group taking a tumble here. Um, it looks like it undercut the recent low, 239 versus 240. Yeah, and then we're below 10, 21-day moving average. We're also below the red line, 50 days. So that's not a good sign. We do have the 200-day really close now. So last time we found support here on the 200-day and also here. So we may see that happening hopefully again, and it could bounce off here. That's what we would like to see. If it falls below the 200-day decisively, and look again, the last two times it was able to recover the next day. So if it falls below it and it doesn't recover the next day, I would be more cautious. And we do have Nvidia coming up, so earnings result. So that's gonna make the big move on this group. So let's jump to Nvidia. You can see it was holding really tight all the way till Friday, and the volume is really subsided. You can see right here. So that might be a good thing, because at least well, we talked about this the last 2 weeks. Like it's just not doing anything. No one wants to make a decision buy or sell, and volume has come down quite significantly until Friday. And Friday we saw Nasdaq took a 2.6% hit. So that being said, it's not too bad when it dropped 3.2%. Again, there's definitely a risk here whether I think again we had this story before. It could beat again, but then last time it beat and it still went down, right? So, but there's also a chance that it really depends on the outlook, right? What they're gonna say. But it's possible that the market still react negatively. So we'll see. The one stock that also got hit was Taiwan Semiconductor. Um, Here, it's been a couple of times now I try. I think I'm gonna give up on this stock. Um, it looks like it's just not working with the new Trump administration. They're not gonna be. They already said that they don't want them to sell any chip stock to China, AI chip stock. So that's not a good thing for them. Because they'll have lower sales, right? So now it's at 50-day line. It's starting to lose momentum, and you can see the red bars are starting to show up more on the volume side. So that also not a good sign. And then you can see there's no buying whatsoever on the blue bars. So there's definitely a lot more selling. So this could be again possible yeah, then to their share. Let's look at ARM. So you can see ARM is just going down, making new lows now. This is really bad pattern because we went from a nice cup to handle pattern to breakout to failing the breakout to seeing this upper trend line resistance. Now it's starting to accelerate, right? So all these are negative signs here recently. AMD also making new lows. This is starting to get really ugly now. So knowing this is happening, the chip stock, which is generally the strongest growth area, this is starting to make the index look not as bad, but that doesn't mean the index not going to follow it. So if this continued to fall, um, all these chip stocks, we could see more pain coming up for the general market index. Let's move on to the software group, and here we see that it was really strong, and this was App, Palantir, and then all the big guys like Salesforce, ServiceNow were doing good too. And then it topped on Wednesday and it pulled back pretty hard. Thursday, Friday, you see that volume is quite high too. But we near the 10-day now, so we want to see if we can find support there. Then we have 21-day here as well. So we'll look at the big cap guys here. Microsoft also fall on Friday. It's kind of stuck in this range zone. Um, not doing too much. So Friday's drop, it's bad, but it's also not bad because it's not that far away from the middle point here. The one stock that surprised me was Amazon. I got knockout here on Friday. It didn't close all the way at the bottom. Let me check the closing range. It's 39%, so it's kind of in the red zone. So my green, you can see my green mark here. I bought here, sold some there, and then I bought it again on this day, but it didn't work because it pulled back right away as the market pulls back, and then it tripped my stop here, unfortunately. Now it could still work because it's not that far away, right? So it's possible it bounced back. Volume is really high though on Friday. I don't know if there's any news. Meta also don't look very healthy. Look at how it make a new low. This is a lot of digestion here, and making a new low is very not a good thing. It's like a it's like a breakout failure in a sense, right? It's like, yeah. Now we're on the bottom range, and we make a new low. There's no support, and volume came in pretty hard. Then we have Google also fall again, breakout failure right here. It just couldn't go, and then market pulled back, and this also follow, and volume is rising. So also not a good sign. Move on to Apple. See, I drew the upper channel line here. Again, tried to come up here on Thursday, but it got rejected as Friday market was down. It followed the market, but the it is tighter, right? The trading range is so tight now. It's possible it could work, right? But yeah, but because it came back in, so it's possible also it could not work. uh, yeah, this is hard to say. It looks like I just want to trade in the range right now around here. So Tesla has a nice run into this high. Even Monday, you can see it gained 35% from this pivot here. So that's a pretty good gain in like 4 sessions. Of course, assuming you bought here. Well, this is 35% from this pivot right here. So yeah, it's a very quick gain. Lots of hype from the post-election, and now it's coming back down pretty sharp. Now Friday it did undercut a little bit, and it found support. So we'll see if it can hold or not. And obviously, the biggest thing that we'll probably hear about on Monday is the Netflix live streaming of the Mike Tyson and Jake Paul's fight. I'm sure we'll hear about the numbers that are live streaming, but personally, when I was viewing it, I had lots of trouble streaming it. So that could be negative. Also, the fight was quite underwhelming based on publicity on social media right now. So it's possible it could fall because of those things. And this is the green line right here. So I've taken a couple of positions right here and right here. If it does come down to 10-day and bounce, I'll probably take another position there. Um, And just because I like their prospects, that they're doing live streaming sports, that is a huge. I think the numbers will be big. I don't know how Jake Paul knows, but after his fight, he mentioned to the one of the announcers, like, there's 120 million people streaming this. That's a lot of people. So anyhow, we're gonna do another video right after this on the top growth stocks I'm following. Lots of stocks are pulling back, but um, they're pulling back on lower volume, which is a good sign. So we want to see how this bounce will go, right? If it's gonna bounce soon, we want to see if those bounces will come back on higher volume and how strong they are, and that will give us an opportunity to get back into some of the growth stocks. I'm a little bit quite optimistic about the future of the market. Their their price at, even though the PE ratio is right how pretty high on in general on the S&P 500 stocks, like I think 22, but the earnings growth is going to be 13% forecast next year. So we'll go through some turbulence, but I think, from here to April, unless the Fed do something crazy to scare the market, or if the yields keep going higher, those are the two negative things that could happen. Um, yeah, and this week is really a pullback week after all the Trump administration appointments, and a lot of sectors are starting to move based on that. And so we're starting to see, who's becoming the winner of this administration. That's why, in the next video, we're going to showcase a lot of the growth stocks that are possibly going to be the new winners in this new administration era. Thank you for watching this video. If you like, please like and subscribe. Thank you.